Hello, welcome back to Insight to Invest, the channel that gives you insight into a company and you decide whether or not to invest to grow your money. In the world of tech, there's a central nervous system that most people never see. But without it, the apps you use every day from Netflix to your banking app would crash in minutes. That system is Datadog, ticker symbol DDOG. But today we're asking, is the dog losing its bite? In just the last few hours, Datadog shares have plummeted over 11%. Today we're going to do a deep dive into the company's core business, the massive 2025 earnings beat, and why a new move from the AI startup Anthropic just sent the entire sector into a tailspin. Is this a $100 per share bargain or a value trap? Let's take a look. At its core, Datadog is a software as a service platform for observability. If you're a developer, you don't just want to know if your website is down, you want to know why it's down. Datadog organizes this into three main pillars: infrastructure monitoring. It checks the health of your servers; APM, or application performance monitoring, which watches how every line of code performs; and log management. It is sifting through trillions of data points to find bugs. But in 2026, they have evolved. They've launched Bits AI, an autonomous site reliability engineering agent, or SRE agent. It doesn't just alert you to a problem, it investigates it, finds the root cause, and suggests the fix. They are now the standard for Cloud Migration 2.0, helping companies manage the massive GPU and LLM workloads that define an AI era. Let's talk numbers. Datadog just reported an incredible Q4 2025. They brought in $953 million in a single quarter, beating expectations. They have free cash flow of $291 million, which is a 31% margin. And they have a 2026 revenue guidance of $4.06 billion to $4.1 billion, which shows strong momentum. What's more impressive is their land and expand strategy. 84% of their customers use 2 or more products. 18% are now using 8 or more products. Once a company starts to use Datadog for logs, they almost always add security and APM, or application performance monitoring. This creates an incredible moat, because ripping Datadog out of your system is like trying to remove the nervous system from a human. It's high risk and expensive. Now the big question: what is the stock actually worth? As of today, February 23rd, 2026, the stock has dipped to $102.62, bringing its market cap down to about $36 billion. This is a critical level. Here's how the valuation models breaks down. For the bear case, some conservative discounted cash flow models argue the stock is still overvalued, with a PE ratio still north of 300x. Bears say that if growth slows below 20%, the floor is much lower. But for the bull case, on the flip side, many analysts see a fair value between $184 and $217. They argue that Datadog's high free cash flow margins justify the premium, especially as they cross the $4 billion annual revenue mark this year. The median price target from Wall Street right now is $190, which suggests that at $102, the stock could be nearly 46% undervalued. So why did the stock just lose 11% in a single day? It was a perfect storm. First, a macro shock. The White House announced plans to raise global tariffs to 15%, sending the entire NASDAQ into a spin. But for Datadog specifically, the threat is Anthropic. On February 20th, Anthropic launched Claude Code Security. This tool uses AI to automatically scan code bases and patch vulnerabilities. Investors panicked, fearing that AI will disrupt the entire software as a service and cybersecurity industry by doing the job of platforms like Datadog and CrowdStrike. However, analysts at Barchart and Baird are calling this an overreaction. Scanning code is one thing, monitoring a live global cloud environment with millions of moving parts is another. Claude finds the bug in the lab, Datadog finds it in the wild. Looking ahead, the big catalyst is June 9th. This is when Dash 2026, Datadog's flagship conference, hits New York City. We expect major announcements around LLM observability and their new autonomous AI agents. So what's the verdict? If you think AI will eventually replace software engineers and security tools entirely, stay away. But if you believe AI will make software more complex, requiring even more advanced watchdogs to manage it, then $102 might be the entry point of the year. That's the state of Datadog. Is this a flash crash or a fundamental shift? Let me know your price targets in the comments. Don't forget to like and subscribe for more deep dives. I'll see you in the next one. Bye.